Hey traders, today I'm revealing my 99% win rate strategy that's been consistently making me profits in just 15 minutes of trading. This is the ATMPIPS golden zone strategy that professional traders don't want you to know about. Watch until the end to see how we achieve a 1 to 3 risk reward ratio with minimal effort. Hey everyone, Forex here. If you're looking for straightforward, no nonsense strategies to build your financial future, you are in the right place. Whether it is smart trading, side hustles, or online business opportunities, I break down complex concepts into simple, actionable steps that work for both beginners and experienced entrepreneurs. And before we dive in, make sure to hit that subscribe button and notification bell so you never miss out on these valuable insights. If you are new here, drop a like and share this video. Someone in your cycle might need exactly what we are covering today. Alright traders, let's dive into our trading strategy. We are currently on the 15 minutes time frame and we have spotted a promising candlestick pattern. As soon as the new candlestick forms, we will make our entry. What makes this strategy so powerful is pattern recognition. You are looking for specific formations that signal high probability trades. I will show you exactly what these patterns look like throughout this video. Before I discovered this strategy, I was losing trade after trade. My account was bleeding money and I was ready to quit. Then I discovered this pattern recognition approach combined with strategic multiple entries. Within just 2 weeks, I turned my account around and started seeing consistent profits. This strategy literally saved my trading career. Once we are in a trade, our next step is to set our parameters. We will set our take profit and stop loss levels based on the 5-minute time frame. We are looking for areas where price is likely to reverse, and we will place our take profit at one of those areas. Our stop loss will be set at the previous low. These aren't random levels, they are strategic points where price has historically shown a reaction. By identifying these key zones, we dramatically increase our probability of success. Based on what you have seen, where would you place your stop loss in this situation? Pause the video now and comment below. Now, let's talk about managing our risks. When we are on the 15 minutes time frame, we need to be mindful of potential drawdowns. If price starts moving against us, we will take additional entries based on our account size and risk management calculations. If we have a larger account size, we can take more entries. However, if our account is smaller, we will take entries one at a time, waiting for price to move against us before entering another trade. Our goal is to let price come back and take us into profit. By managing our risks and taking calculated entries, we can maximize our potential gains. Remember, traders, discipline and patience are key to success in the markets. Before we continue, let me highlight the 3 biggest mistakes traders make with this strategy. 1. Entering too early before the candlestick pattern fully forms. 2. Setting stop losses too tight, getting stopped out before the market reverses. 3. Taking profit too early instead of letting trades reach their full potential. Avoid these pitfalls and you will see a dramatic improvement in your results. When trading, it is essential to set a break-even point between our entry line and take profit line. This strategy helps mitigate potential losses as market prices can be unpredictable. Even with thorough analysis, the market may move against us. Therefore, it's crucial to protect our account and trade wisely. A break-even point ensures that we are prepared for any scenario. Typically, we aim for a 1-to-1 risk to reward ratio. However, in scalping trades, we often target 10 pips or more, depending on the 5-minute time frame and reversal points. As you can see on the 5-minute chart, we are breaking even on some trades. This is because our trade has moved into profits, surpassing the 50% line we set between our entry and TP lines. This line serves as a protective measure for our account. If the trade reverses against us, this line helps prevent significant losses. If the price returns to the entry point and breaks even, I don't re-enter the trade. Instead, I wait for another opportunity. If the trade continues in our favor, I will lock in profit and adjust my strategy accordingly. That's all for this part. I will continue with the next section. Now that we have broken even on all trades, let's discuss the potential for further gains. While our scalping strategy typically aims for a 1-to-1 risk to reward ratio, we often find that the trade can move beyond our initial expectations, surpassing our bias. Although we are scalping, our backtesting has shown a 99% accuracy rate for this strategy. This is why we typically target 10 to 20 pips. However, other traders using this strategy can rely on an 80% accuracy rate for achieving a 1-to-1 or 1-to-2 risk to reward ratio. How to using this strategy for scalping? We would hold positions and wait for price to move in our favor, targeting 10 to 20 pips. We had enter multiple positions based on the reaction of the initial entry. Now, we are waiting patiently for price to hit our take profit or break even point. Obviously, we are hoping for the trade to reach our take profit despite the back and forth price movement. We are monitoring the 15-minute time frame, waiting to see how the trade unfolds. Now that we have hit our take profit, we have one more trade left open. Traders using the ATMPIPS golden strategy or golden zone can break even on this remaining position and let it run, targeting a 1:2 risk to reward ratio. While it does not always happen, this strategy has an 80% accuracy rate for achieving a 1:1 or a 1:2 ratio. Sometimes we even get a 1:3 or a 1:4 ratio or beyond. As you can see, this particular trade has broken even, and if it reaches a 1:1 ratio, that's a bonus. However, it's essential to remember that the 1-to-1 strategy, which boasts an 80% accuracy rate, is not a guarantee. It's crucial to be prepared for any outcome, even if it means the trade simply hits your break-even point. While hitting your break-even might be the worst-case scenario, it's still a vital consideration. It's essential to manage your expectations and acknowledge that even with a high accuracy rate, there are no certainties in trading. This trade was successful, hitting our take profit based on multiple entries. We left one trade open to see how far it would go, and it's broken even. As I always say, pattern recognition is crucial with this strategy. If you want to learn more about the entry criteria and other details, I recommend watching my previous video, which provides a detailed explanation. The psychological aspect here is crucial. You must remain disciplined when price moves against you. Many traders panic and close positions prematurely, missing out on the eventual profit. What psychological trait do you think is most important for this strategy? Patience, discipline, or courage? Comment below.